All right, we are live. Twitter link is going out. Just a hastily assembled stream to catch the end of the day. Hey guys, welcome. Guys, if you wouldn't mind doing me a favor, check out the live stream chat. If you would like to get a few other people in here, please share the link to this stream and join us on the YouTube side. And make sure to make anybody new coming in to feel welcome. Nothing like throwing together a last minute stream for the day.
Yeah, just throw it at the wall, man.
Yeah, see if it sticks. All right.
Handful of spaghetti.
Pause champ, congratulations on your gains, everybody. Mike Lalonde, 40% gain. Very nice. RDBX is just absolutely ripping faces off. I love it. I love it. So, guys, if you're coming in here for the first time and you're looking into why Redbox Entertainment is running, this was actually a short squeeze play that was called out by DM Calls on Twitter and here in Hell's Trading Floor. This is an analyst member who's been with us for quite a while, and he's been pointing out squeeze plays for pretty consistently in his history. RDBX was the most recent one that he had thrown you know, a full bag on the table for. Went all in, and as I understand it, it's playing out pretty well for him. So right now it is retracing a little bit, but the pressure is on. If you're wondering if this is FOMO at this point, I would say yes, it is a little bit of FOMO at this point. However, what I would also point out to you is that the shorts that entered have been entering at consistently from the $2 price level all the way up to $3.50. Now, a lot of the shorts that have entered in as of recent were actually in after this gap down took place back on the 2nd of February. So there's been a whole bunch of short interest building throughout this entire period of February through March and April. Let's go ahead and take a quick look at, let's see. Need to refresh my clock here. Why is my clock not working? There we go. Okay, very good. All right, got the clock fixed. That way we can track the last few moments in time down to the second. So right now, Redbox Entertainment retracing at $5.60 or thereabouts. I am still expecting this thing to keep moving, so I'm holding on to my position for the time being. This is a risky play though, because the volatility in this one is pretty high, and it's already at that level or above that level that we estimated that shorts would start to really truly feel the pain. Let's go ahead and take a look at Ortex and see what the levels are for these shorts. Got to close some work stuff. Okay. So, Redbox Entertainment. This is currently the short interest percentage of the free float. Let's take a look at utilization. You'll notice that utilization's been maxed out ever since the price hit a peak of $3.61. Utilization's maxed at 100, meaning that the maximum number of shares available for lending have already been issued or borrowed. Now, the pain for market makers is going to be when they start using short exempts to keep up with the buying volume. And if that continues, then that will cause failures to deliver to spike, and then you know the story from there. Market makers have only 6 days to cover those failures to deliver before they get smacked by FINRA. Looking at the overall short interest, we can see that there is currently 1.4 million shares against Redbox at the moment, and it is still challenging higher highs. So since it's now filled the gap, security lending volume is still pretty high, but we're not going to get the end of day results until probably about 2 hours after the closing bell today. So for that reason, I'm hanging on to my Redbox shares, and we're going to see where this thing can run to. It's mine's a modest position, honestly. I didn't have a whole lot of spare capital to play with, but I'm very happy with the results of my gains, and I'm still expecting more to come. Let's go take a look at a couple more data points really quickly. Shares on loan, all the way up at 2.5 million, which that places 92% of the free float on loan. That's insane. So this has definitely become the result of this is moving based on the result of a total supply crisis, and retail can take full control of this right now. Now, I'm not telling anybody what to do, and at this point, with the price rising so high as it is, I cannot tell I cannot recommend anybody to FOMO into this stock, because that's exactly what this is just FOMO taking hold. And if I were sitting on the sidelines looking at this stock running right now, I would not be taking a position. However, what retail might end up doing is seeing this running and then pour into it, because that's what retail does. There's the possibility that that can put even more pressure on the shorts and cause the price to run further. But we won't know if this is actually shorts covering or if this is just FOMO from retail pushing the stock price higher and higher. We don't know what that is, what the result of this is just yet. Let's head back over to TradingView and take a look at where our volume is currently at today. So let's see, we had our big run up to about $5.60 on a 12.3 million volume surge in a 15-minute period. And the opening bell, we had 7.5 million there too. So that's a lot of volume at the beginning of the day. All right, so we need to go ahead and figure out where our next level of resistance is. It looks like $6 was it, which you can kind of figure that. Everybody likes round numbers.
It has been following the fibs quite a bit since the low at around, what was that? I'm trying to do math in my head. 11 o'clock. So the 450, right from that move from 450 north. If you draw a Fibonacci retracement up to 615, and you look at the kind of megaphonish channel that it's been building out, it's been minding those support resistances as well as those fibs quite well. You
Yeah.
can see when volumes start to pour in where retail is pushing it outside of that and they're trying their best to control it a bit.
Yeah, I agree. If we look at a trend-based extension, what I'm seeing here is that the potential resistance at the next high would be about $8.45, which, if this were to truly squeeze, I think that that's in the realm of possibility. Tell me what you think about that one, J. Ruff.
Zooming back, let me draw an extension here.
If I go back in time and write an extension retroactively, it shows that the $4.94 level is the breakout level, and that above that our resistance would be $6.84-85 thereabouts. I misdrew that a little bit.
I like right around 7:30 for the short term. If we got a really big push, even in after hours,
Yeah.
all the way up to about potentially 780. But I think I like that 7:30 mark.
Okay. Where are you drawing?
7:35.
Where are you drawing your tops and bottoms of your trend?
I've got my last trend starting at around 450, and I'm drawing the top at 615, which is the daily high right now.
Oh, I
And
see.
I'm pulling the extension down to where if it kind of holds where it's at right now, it's kind of filling at a wedge. And that wedge also happens to be on the 50% retracement on that full move. So if it can pin there and move from there, I like 736, I think is where my levels are at.
Okay, I see how you drew it. So you're doing it based off of the short term. Okay.
It's been legging up, and what I've been noticing they've been doing is they've been doing that overlapping fib play to where it looks like it's dropping down 61 down to the 61.8. But if you're actually tracing it from a wider the bigger move, they're actually dropping it down to the 38 too. And if you're when they do that consistently, I've been able to kind of figure out where their major pivot points have been. And then once they finish that pattern, draw the extension from that point. And I've been able to day trade 3 sessions so far on the legs up, trading out of the highs and buying back in at the lows.
Okay. So you're doing this a lot more frequently than I am. I have a small block of shares, so day trading this one feels a little bit, I don't want to say pointless, but I am sitting on an 80% gain right now, so I'm kind of wondering if I should day trade this, but it looks like it's going to find support. If it does find support at 550, then it could do another leg up soon. I need to find the breakdown level, though, just to see if yeah, I think that my previously set level of 525 is going to be it. If it breaks down below 525, then that would be the bearish below point. But at the same time, like I see that shorts are going to try to push this thing down, but there's still unlimited ammunition. So if this isn't shorts covering and preparing to deliver their shares back, even if they did, then those shares won't be available for lending for at least 2 days. So even if this is shorts covering right now, the shares won't be returned until Tuesday. And there's a lot of time for this to run between Monday and Tuesday for sure. see, can I do a trend angle here?
Redrawing that channel there, and it's really testing the edge of that wedge. I think if it breaks here, it might be on its next leg up.
Yeah, if it just holds this level here. Yep. This pitch fan, I think, has got a good setup here. If this holds this level, then I think that we break out past $8, or well, past 650 on the short term, but $8 on the long term over the course of the next several weeks. It may not even take that long because short squeezes become much, much less predictable. I see people chattering about the S&P right now. Let's catch up with chat. How you guys doing? Cadude made one hell of a call with RDBX. Yep, Cadude is who let us know. Oh, look, volume's coming back into it. I see it bouncing around. Let's look at this on the minute chart. Let's look at this at the close. Oh, yeah, look at that. Wow. Almost 500,000 shares traded in a single minute there. That's beautiful. This is where shorts hammered it. They found some shorts to play with. A lot of profit taking as well. So this is going to be a tough area to break out of, but if we do, oh boy, if we do, this zone of supply would be a massive breakout area. It's going to be tough. It's going to be tough. But retail could do it. I'm just going to point some numbers out. I'm not telling anybody what to do because we don't do financial advice here. But there's only 8.8 million shares in the float on this entire stock. And according to Ortex, 50% of that, based off of the old float numbers, is already shorted. So if shorts are covering right now, then they have to return those over the course of the next 2 days. Those shares won't be available in that time. So if we establish a new higher high between now and the next 2 days, then even more shorts are going to be forced to cover. So this is the first leg of the short squeeze that I see like truly playing out. We're doing back-to-back cup and handles, getting tighter and tighter handles each time. And I will also point out that we've already filled a gap. If you go all the way back here, this gap that happened back on the 2nd of February when this thing came crashing down from $6, it was more like $5, and it was like $5.20 or so. It crashed all the way back down to $2.40, and it didn't fall much further below that. But shorts entered in, trying to take advantage of the down pressure, and they got trapped down there. They immediately got trapped. They have quickly come to regret their decision. So I'm liking the volatility here. We're doing George W's as well. Big downtrend, automatic bounce, drop back down and establish a new higher low, and now it's gone for another leg up. If this pennant completes, then it looks like we're going to have the next run here. So looking at flags like this is what you would call a bull flag. Big move up and a large breakdown, then a breakout, and then another run. We're looking at the same thing right here at the end of the day. So we'll see what happens. We've got 5 minutes left in the trading day. If we can close at or above our previous all-time day high, then that would be a clear sign of continuation going into next week. And the FOMO can really kick in going into the weekend. People can, this story is going to circulate. Ah, no, go away. I don't want Apple. Get this disgusting garbage off of my charts. I don't know what hotkey that is, but I don't like it. All right.
Man, that level 2 keeps getting chewed up. Yum, 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 yum. Wow.
I got to look at it on my Fidelity, and I can't show my Fidelity because it's got account information all over it. But I am watching the level 2 on my other screen. I see what you're seeing. Very nice. See, this is fun. Having days like this is fun. There we go. We got a break out of the bull flag.
Can I ask you a question, DD? I
Yeah,
don't
what's
think
up,
you've
Dave?
addressed. You know the you read the 8K that came out for RDBX yesterday.
No, I did not read that filing. I've been really busy. You want to give me a summary?
Ooh.
A little
I'll
bit.
give you a summary as much as I can understand. There's they got some more financing. It seems like $50 million worth of extra financing in the form of zero cost or nil cost warrants, whatever the correct term is.
Oh, that's beautiful. Okay, so I'm pulling up that filing now. I'm gonna get it up on Fintel.
Yeah, I can't. There are so many provisions put on those warrants though that I've struggled to get through. There's pages and pages of attachments.
Okay.
With
Well,
provisions.
I'll have to go and read through those provisions later on. Oh boy, here we go. Look at this end of day surge.
$6. Just battling for 6.
Lots of profit taking at 6. Oh wow, look at that. Somebody had a stop limit set there to sell. They just turned that all into market orders and just started slamming the price. All right. Well, we'll see if this keeps running after hours, but that's very good. This was an excellent run. We might get a sandwich candle here though. Sandwich engulfing candle. Come on.
There was
Oh.
Hey.
Order cancelled.
Oh man, I thought that it was gonna form a bull hammer at the end of the day. I was gonna be like, oh man, I was so hoping for a bull hammer. It'll probably show up as one at the. Nope, soldier candle. This is a lovely, lovely chart setup, though. Look at this. Look at this. Can you ask for a better day for a stock? How much did this run from open?
69.41%.
Wow. 45% just since open. Since yesterday's close, though, 69. 69. Very nice. 69%. And that's right on trend, too. Wow.
Almost makes you wonder if this is all a simulation or something. Huh?
It does make you wonder.
Or if Elon's just pulling the strings of everything, one or the other.
You can never be too sure.
Joking aside, there's one thing I did like in that 8K on page 10. There's if you search for Phantom, it mentions Phantom shares, and the company reserving the right to make amendments to issuance of shares should, in case of such action, such practices being uncovered.
Okay, I'll cover those. I'll cover those later on because I feel like that's going to take me some time to go and work through that to understand those filings.
Yeah, there's a lot of it.
Let's go ahead and catch up with chat and give everybody their end of day updates. Hey, if you guys got a early entry to RDBX, thank Cadude and for his call out. He was the one who brought this to the trading floor's attention. He called this one out very early. I think it was like down near $1.90 or something. He was calling it out all the way back down here-ish. So it was an excellent setup. He nailed this one right on the money. Perfectly called the bottom. I would say that most of the trading floor got in at a pretty decent entry below 250, but we did have to take some time to confirm his findings. But if you got in, be sure to let everybody know in the chat how well you did. Everybody loves a good set of gain porn. How about ATER? All right, Rebaz, I'll check out ATER. I know that it was setting up to make a move at the end of the day. It looks like it's consolidating still. Not quite ready to move just yet, but it is looking good. I was expecting it to move into this channel, but it might be a little bit to hope for just yet. So I'm going to go ahead and set a new trend here. I'm going to go clean some of this up. All right. Yeah, if ATER can keep holding this support at $5 and hanging above it, then that would be ideal. $5 and above, there's a lot of options that are set to run in the money. And most of those would have been purchased much earlier, down below $4. So lots of options that were out the money running in the money for ATER. Good chance for a gamma squeeze. Our big target is May 20th. There's it's something like 40% of the float on the chain. How about BRQS? BRQS is doing okay. It's still consolidating from the last time that I looked at it, but it's consolidating with higher highs and higher lows, just on the near term. So if we look at this trend, this yellow trend line, you'll see that it's holding up nicely. Still touching it with the wicks, but the candles are closing above the trend line, which is a good sign. We're still waiting to see if we can get a breakout above this. Oh, here, I've already got a trend line established. So let's see if we can close in on this falling wedge here. And break out above 35 cents. What we really need to see is a return to about 40 cents so that we get back up into this channel, which is where it was trading before. But BRQS is consolidating to at a new higher low, which is still bullish. No PPT today, I'm shocked. Is PPT a ticker? Putnam Premier Income Trust. I don't know why. No, that user must have been talking about something else.
He might have meant PowerPoint.
PowerPoint. Oh, no PowerPoint. I got you now. Okay. CRXT is consolidating to the downside. It's now entered into a downtrend. So not the greatest sign. But I still happen to notice there's still a lot of the short interest on it is continuously building up. So I'm still holding on to my position. This move to the downside is a little bit frustrating, but I think that it's being held down by that offering. We just have to give it a little bit of time. Don't sleep on ATER? Absolutely not.
Plunge protection team's another good suggestion for the acronym.
Yeah.
I don't know if you were talking about them at all recently.
Let's check out BBIG. So BBIG broke above the descending channel on the trend line. So BBIG was one that I was expecting to hold its support and break out above this trend, which it did. It's still down on the low side a little bit, but this was the move that I was anticipating for it to show a sign of strength. So this will be the point where it's likely to get some attention from day traders. Let's see what the MACD is doing on, let's see, this is the 30-minute. Let's look at the daily. BBIG is moving up in post-market as well, so that's very nice. MACD is getting ready to make a cross here, and the RSI is returning to show a sign of strength. So this is an indication of a reversal incoming. Right now, it's moving pretty decently in post-market, which is a good sign, and the volume increased just a little bit today. Just on this small increase in volume and price, if you had gotten those calls for BBIG that I had called out at the time when they were trading for approximately 20 cents, you would be up 25% on your calls for $4.50 strike expiring July 15th. Obviously, I'm not selling those right now. I'm holding those for the long term. I bought those for far out expiration because I expect a big move in the near term within the next 3 months. The calls that I have about 80 days till expiration, and my prediction for BBIG, I use the word prediction loosely, but my expectation is that once this MACD cross completes and the show of strength is more obvious to both day traders and algorithms, that is when the surge of buying will take place. And what I am anticipating for BBIG is, since we have finally established a clear descending channel for BBIG, and it's been sitting at this support for a long time. If I could go ahead and draw this out, it's been here for 160 days. It's a long time for it to be consolidating at this level. Probably the longest that BBIG has traded at this level since, back in 2021? Or, no, all the way back in August of 2020. So this was about the same time frame that it had consolidated for down at this level, or actually a little bit further below this level, back in 2020. And the last time that it consolidated at this level, it only did so for, it touched it down in this zone back from February till May before it made a brief move up to $5. And then it only spent about, less than 30 days below $3 before it made its big squeeze move up to the top. This was a lot of retail and FOMO coming into the stock. And then they did a dilution at the top and kind of crushed it. But anyway, the focus here is on this descending resistance. So if BBIG does a similar thing to what it did in its past history, I'm looking for BBIG to turn around for a squeeze. Let's go ahead and take a look at the Ortex data just to see where we're currently at with the short interest.
Here goes Redbox in after hours.
Oh, really?
613 and climbing.
Where is my... I'm looking for my... for whatever reason, my Firefox window is missing.
Hey, TD, today at about 11 o'clock, an unusual Wales print for BBIG. $3 calls for the 6th, 600K in premium.
No kidding.
Yeah, I put it in a live stream update so you can see it.
I'll buy that for $1.
Jason Lesney, thank you for the $5, my dude. Appreciate all your contributions, learning a lot from you. Keep on rocking. Thanks, dude. Really appreciate that. Let me go on and check my Vortex. For whatever reason, Firefox threw a fit. Okay. BBIG, let's go to the shorts, see where this is at. All right, days to cover is rising. Let's go look at the estimated short interest. Still hovering at about 3.5 million. 30.5, sorry. BBIG has been getting knocked on and off the threshold list for a long time. I've been getting a little bit frustrated with the lack of activity in it. Average days on loan are rising again. So shorts are still holding strong, which is good. That's what I was hoping for. Shorts still didn't cover. That's pretty wild. Even after it fell down this far, they still won't cover. So 48.5 million of these shares are on loan. So more than it's 27.5% of the float is on loan. All right. And the utilization maxed out as always, as if we should expect any different. So BBIG, I swear, if retail would just get a hold of it, just get their hands around this stock and just start buying shares, this thing could move easily. It's been maxed out on loan for months, going on a year. Like, this thing has been maxed out on utilization ever since early August. The shorts that got stuck in this thing have been trapped all this time. If retail just buys the stock, this thing can squeeze. So frustrating to see. Let's go take a look at what the Gamma Ramp says about this one as well. BBIG. %10 of the float could run in the money up till the $5 strike going to May, till the end of May. There we go. This is what I was looking for. So July 15th is a huge date for BBIG. Currently, the price is at $250, right? At $4 strike, or actually, let's see. Oh yeah, $4 strike. 3% of the float goes in the money. If you bring it up to $550, then 10% of the float goes in the money, and so on. $5 is well within the realm of possibility for this stock. Now I'm going to pull up the live options data and show you the ScourgeBot heat map, as well as the top tickers, or the top calls. This is the top options traded in BBIG, just top options, puts and calls. Look at how many of these are just in calls. Look at how much volume there is. For May the 6th, $3 strike calls have had over a 98,000 traded volume in this stock, with just a 6,400 open interest on this stock. What frustrates me is that if you look at the July options chain, the July options for BBIG are so stupidly cheap. Anybody who is buying options that are expiring next Friday is dumb. There are so many more cheap options that give you more than 80 days till expiration. Why are people buying weeklies? Stop buying weeklies. You are draining your bank account for no reason at all. That is so frustrating. I'm gonna go look at the bid and ask. I'm gonna go look at the bid and ask on the options chain for BBIG right now. Ugh.
The amount of premium that they must be raking in. I mean, that's why they're able to they take out all these short positions and sit on them forever, is because they're raking in so much money from premium. It's just a business expense at that point, and they can pin down and control the price of the stock. Once they have enough coin in the coffer, they can just push it and push it and push it, and then after that first initial big bump, it becomes, I'm assuming, that much easier and that much easier to control the price, because you're just adding to that premium position until you get another substantial move. And at that point, it's got to be significant enough to be outside of their control, even with the new control they have over the stock.
That's exactly what I'm saying too. Like, look at, look at this heat map. Look at the heat map for BBIG. You see all of these calls for July 15th. Okay, I got $4.50 calls at this exact strike for 20 cents per contract. 20 cents per contract. That's $20. Or 20 cents per share, $20 per contract. I was able to get 40 of these things for just a few $100s. Why are people buying the same strike for this Friday? Why? Why is anyone doing that right now? There is no reason to do that. If anything, you should be selling you should be selling calls or selling call spreads at these ridiculously overpriced short-term out of the money options, because anybody who is buying weeklies this close to expiration at such a far out of the money strike price, they are either trying to just cover calls that they already sold so that they can close them, or the person buying it is an idiot. I'm sorry, but I have to be blunt. If you're buying a deep out of the money call option every Friday thinking that suddenly it's going to take off, you are stupid. Don't do that to yourself. Don't drain your bank account playing these gambles every single Friday. Just don't. Look for stocks that are trading with extremely low implied volatility for far out expirations. Give yourself 3, 4, 5, 6, 7 months. If you had looked at July 15th strikes 2 days ago, you would see that you could have gotten $5 strikes for 10 cents, the same price that the $4 strikes were trading today for this week.
I think you're hitting the nail on the head. And the problem is, not only do they make it so easy to buy weeklies with the different platforms that are out there and making options a little too simple, like, oh, this is all it is, but not explaining them completely. And I think that a lot of retail who's trading options doesn't fully understand. I mean, they know them enough to trade them. They know them enough to know when they make money on them. But they don't understand them to the point to where they understand the market mechanics of them, because the market itself is so sideways. It's really hard to understand it as it is right now. So what we have is this perception with most of the retail public thinking that the stock market is moved by people buying and selling stocks, which we know is not the case. It's entities and massive hedge funds buying and selling positions. And we know where most of these orders are routed, where they don't. So when they're playing these weeklies, they're thinking it's just a matter of maybe this is the week. And they're not thinking of the fact that they've already got this week pinned down, and you're just handing them premium for another short push a few weeks out. Like, this move, this whole kind of push is already bought and paid for. They're not going to move it unless something crazy happens. And the more people understand that, the more they're going to be able to knowledgeably put their money where it's going to matter, and it's actually going to make that difference. But I honestly don't think a lot of people realize what they're doing.
Yeah. Well, I'm gonna give everybody here a tool. If you are new to options trading, or if you have been burning cash playing weekly options for the last however many months, pay attention. This is for you. Look at this. This is bar charts options quote page. You can look at any ticker on the market, and you can look at the pricing for any options at any week, and you can look at them all by comparison. You have the bid, which is the average buying offer, and you have the average ask, which is the average selling offer, and the midpoint, which is the perfect middle point between the two. Okay, that's the midpoint in the spread. Pay attention to these prices at the money and then slightly out of the money. Right now, if you purchased a weekly option this week for $2.50 or above, your calls are worthless right now. I'm sorry that happened to you, but honestly, you should have seen it coming. If you look at July 15th, look at the difference in the prices. I got this option for 20 cents. You could have gotten this option for 40 cents yesterday. Now, you may have gotten fewer options, but you give yourself a far greater chance to be correct. The reason why is because the delta on these options is significantly higher. Let me see if I can look at the... No, they make you have to pay for it. So they won't let you see the Greeks. But if you have an options service that has Greeks on these options chains, look at the Greeks and pay attention to delta. Delta is always between a value of 0.0 and 1.0. It will never go higher or below those values. Think of delta as a likelihood of going in the money, or likelihood of expiring in the money. The higher your delta, the more likely the option is to expire in the money. If your delta is 80 or 0.80, then your delta, the intrinsic value of your option is 80 cents. But it also means that it's an 80% probability of expiring in the money. If your delta is 30.30 or below, then it's a 30% chance or lower of expiring in the money. Target options that are between 45 and 65% chance of running in the money or higher, and by doing that you go further and further in the money or closer to the money, and you will give yourself a better chance to be correct. Further, pay attention to IV. This is implied volatility. Notice how low the IV is on these options. IV is usually between 80%, and if it's a volatile stock, 500% is where it can go, like at its highest. But most of the time, IV is really, really low near the money. The closer you are to the money, the more subject a option is to implied volatility changes, meaning when the price goes up and down, then the IV percent changes. When your IV percent changes, then that interacts with the Vega Greek, and it increases the value of the option based on its volatility. The idea of this is that you want to buy your options when the IV is extremely low. Note how low the IV is on this particular option, 250. The IV on, we'll go to next week because you'll get a better picture since all of these have expired, all of this week expired worthless. But notice how low these particular ones are. BBIG was trading at around $2. It was trying to get above or below. The options, the IV in this stock, if it went up by $1, just $1, if this stock had it would be a 30% day, right? IV at this price would likely increase by more than 150%, which would nearly double or more than double the option's premium value. Buying IV when it's low is ideal for you because you get a better price for a more volatile option. If you expect a big move in the short term or even a few months from now, purchasing an option that has lower IV gives you a better chance to make a profit on the premium, especially if you're not holding the option to exercise it. If you're trading options with the idea that you're going to sell that option at a profit, buy one that has low IV. Don't buy one that has high IV. In order for this option to become profitable, the stock would need to run from $2 all the way to $6 within a day in order for you to even break even by the time it expired. But the chance that that happens is extremely low because you have other factors working against you, such as theta, which is constantly eating away at the value of the option that's out of the money. The further out of the money you go, the faster it loses value. That's the point that I'm getting at here. And if you're close to the money, if the stock moves by a large margin, then the IV will crank up by a huge margin and you can take profit more easily. So these are all things to consider when you're purchasing these options. But the main point that I'm trying to get at is go further out on your expirations. Stop buying weeklies. If you're going to play options, play them smart. Don't do these stupid YOLO calls that put you $2 out of the strike just because you can afford 100 of them for $20. Don't do that. Well, I guess that's not possible. You can get 100 of them for like $200. But like if an option is trading for 2 cents, there's a reason for that because it's worthless. Don't buy 100 call contracts that have like a 2-cent premium in hopes that the stock is going to blow through the ceiling in a day. Like it's just you're setting yourself up for failure. Anyway,
that delta is such a helpful tool when you're looking at all of this too. When you were explaining that, and a good way to wrap your head around it is, I mean, you're buying options contracts because they're cheap. You're not having to buy a full share. You got more leverage. But when you're looking at a delta, the closer that delta is to 1, the closer that options contract is going to move on a 1-to-1 basis with the underlying asset. So for every dollar the stock price goes up, it's going to have the same proportional move in the options contract the closer it is to 1. So if you buy an options contract that's kind of close to that 0.7 mark, you're going to very quickly start moving into profit, and you're going to actually start making money, and it's going to start moving 1-to-1 with that underlying stock a lot faster than something that has a really low delta and is way out of the money, because then you're going to have to wait for that thing to really ramp up and get going before it even starts to turn green and go anywhere.
Yeah. So you might be able to afford a whole bunch of them, but it's not going to matter because it's going to rapidly decline in price and value such that if you had waited, you could have bought twice as many by the end of the day. And then you realize how quickly you're draining your cash because the value of that option declines so quickly, you can't get out of it for a profit or even for a tolerable loss. You've basically given away the money that by the end of the day, if it hasn't moved up according to your expectations, you've already lost at least 50% of the value. And that's just not a good way to trade. You should be giving yourself plenty of time so that you have more theta. That way, if the stock doesn't move or if it moves against you, then you still have time to get out of the trade. And if you give yourself a closer strike to the money, then you're going to quickly see returns if the stock does go in your favor. If it goes up by $1 and you go from out of the money to in the money, not only is IV increasing, you're also putting yourself in the money, which increases your delta. That's your intrinsic value. So for every dollar the price goes up, it's going to increase the value of the options premium just based on the delta. And your gamma will increase too, which gamma is the rate of change in delta. So whatever your gamma is, if it's 0.30 and your delta is 0.7, then your delta will change. If it goes up by another strike, then it will increase your delta from 70 to 1 right away. Those are arbitrary numbers, but that's how the options chain and the Greeks kind of work. If you're not familiar with these terms or if it's too confusing, check out some videos that explain the options Greeks. It's well worth it to educate yourself in this. Playing in the options market is extreme. Even if you don't play options, you should understand them. You must understand them.
It affects how everything underlying works. I mean, just having an understanding of how this stuff works and being able to look at a table at a flash, you can, if you're a long-term investor, you can look at that and say, wow, there's something big going to happen here. And look, if you haven't done it, already, anybody listening, Google a chart on theta burn and just look at the visual, and you'll see how drastic it starts to eat away at your profit starting 30 days out.
Right.
And it's impressive to visualize it and look at, because then you have to think about all those other Greeks that TD was just talking about, and how drastically proportional the increase has to be in all of those to counteract the theta burn that you're going to experience under that short time frame.
My point exactly. Let's take one more look at Redbox before we close out the stream today. We see that we're consolidating in after hours, which is a very good sign. Normally, this would be a lot more volatile. The volume's actually not really going away very much in after hours. That's very good. That means there's a lot of interest taking hold in this stock. I am very confident of continuation tomorrow. If you're holding, then congratulations on your win. If you're willing to hold a little bit longer, it is a risky play. Always understand your risk and never play with money that you are willing to lose. If you are in profit, there is no shame in taking it. But I do see upside in this. I am holding. Just look at these swings. Just look at these swings. If we see sideways consolidation along this zone of supply for the next several days, Redbox is going to squeeze. This is not a squeeze. It looks nice. Don't get me wrong. It looks very nice. But if we see this thing consolidate sideways for the next 2 days, there can be massive, massive upside. I don't think it'll take that long, though. The shorts are going to be delivering on their shares in the next couple of days, so we'll need to see continuation before the opening bell on Tuesday. Otherwise, you might see some profit taking from from whoever recalled their shares from shorts, if this was shorts covering. We'll see what the returns look like in the next. We'll see what the short returns look like on Ortex in the next couple of days. If you want to protect your profit, though, what you could do is you could set a stop loss. I would set the stop loss probably at about 20%. Trailing stop loss of 20% is nice. It's this thing has already made a big move, so it is going to be volatile, and there's a high probability your stop loss gets triggered just based on the volatility alone. But if you want to lock in these profits, then that's one way you could do that, is make sure to set a stop loss. I don't set stop losses on highly volatile tickers, though, just so that everybody's aware. I only set them for like my blue chip plays and my long-term holds. If I think that a play is collapsing, I'll set a stop loss on it just to protect my value. For something volatile like this, where I have a small position that I'm willing to lose, I don't set stop losses. I just set alerts. Let's catch up with the rest of chat. CRXT offering is closed. Okay. Well, thank you for the update. Please cover ALZN. Yeah, let's do that. Let's take a look at ALZN. ALZN moved up to $1 today, which is exactly what I was looking for. I was hoping to get a fill on some of these contracts today. I didn't get a fill. But ALZN, this volume, this volatility, exactly what I was hoping for. Today was a big move for ALZN. Moved from 90 cents up to $1, almost touched $1.10. This is the This is the zone of resistance for this stock that I have been waiting for it to break out of. This is a downward channel right now that's part of a much larger falling wedge. So right now you see this down channel that ALZN is in at the moment. What I'm looking for it to do is to break out and consolidate at $1 so that it can break out above this falling wedge. If you look out further, oh, I forgot to turn on my after hours. Oh, I see. I'm on the daily chart. That's why this is looking a little strange. Okay. Okay. So ALZN consistently makes these big swings, especially in after hours and in opening and closing bells. There's big swings like this. What I've been paying attention to is this falling wedge on the stock ticker. It's kind of more like a decay curve, but this high point is what I expect to set the trend. So ALZN, if it is going to break out, it will most likely consolidate and exit this bull channel if it holds this support at $1. And if it can hold that for the rest of the month, then a breakout of this falling wedge could send it on its next leg up. This is currently a stock that's being purchased by BitNile Holdings. So if you're also in that one with us, BitNile is it's a combination holdings company slash crypto play that's held by Todd Milton Alt of Alt Global Holdings. He's got a whole bunch of companies that do investments on his behalf, and he's got sole voting power for this. It's basically just a shell for him to hold a huge number of stocks for with big tax breaks. And Todd Alt he gets involved in a lot of pump and dump stocks, so I'm looking at the tickers that he plays, and he gets a huge stake in and then predicting when he's going to do a pump, so I get in ahead of time, and that's kind of why I pay attention to these. So Nile and ALZN are two such stocks that I'm expecting him to start up a new pump and dump campaign and try to capture some of that. RDBX still hovering at $6 after hours. Very nice. HOOD. Why do we want to look at HOOD? The company's going bankrupt, isn't it? I see it rebounded after its big sell-off. That's kind of funny. I wonder if Cathie Woods bailed it out, or maybe shorts are just exiting. This might be a bear rally. This kind of feels like a bear rally. I'm going to say that probably a bunch of bears just exited their positions and took profits, because look at how far HOOD has fallen just in the last just over the last, well, hell, just since it IPO'd. But wow, from $16 all the way down to a low of $9 in 1 month. That's bad. That's bad. From that close down to this bottom, they've lost 40% of their value. They rebounded today with an automatic bounce, but I think it's a bear rally, and I don't think it'll last. Creighton Alford up 8,000 today on RDBX. Congratulations, homie. James Valdez says, I don't have faith in BBIG options anymore after the last BS move. I doubled up and averaged down last week, ready for it to move so I can move on. Yeah, I hear you. I stuck with the really far out expirations for a reason. BBIG is not predictable, and you end up holding for a long time, but I really do see turnaround in the near term just with the volatility that BBIG has moved in the past. I'm going to go ahead and set up some Fibonacci levels probably tomorrow, and I'll figure out where the resistances will sit thereabouts when BBIG makes its big move. But with the Cryptide offering, that's when I suspect that will trigger it. I believe they had a good announcement today in the news. Yeah, profits rise, revenue falls 11 days ago. Okay, so this is a bit past, but yeah, we'll find it. There's been some news on BBIG, so I'll track it down and I'll let you guys know. If you're buying weeklies and moving shares, just buy shares. Augustine Da Vinci wants to know what's a good place to learn or any book recommendations. I assume you're talking about the options stuff. A good YouTube channel that I watched. I don't know if he's doing videos anymore, but his channel's still up. It's called In the Money. He does excellent. He does some excellent work describing options and how to make them profitable for you and make them work for you. He is where I did a lot of my research, and then there's also a really good tutorial video done by a professional trading firm called The Options Greeks Explained. I'll see if I can find it and I'll drop it in the chat. It's called Meet the Options Greeks. I'll go ahead and post it in chat. You guys can check that out. If you're looking to learn from some of the people that are here on the trading floor and get more responsive, just suggestions on how to improve your trading strategies or get asked questions, you can join us at Hell's Trading Floor at discord.gg/Hell's Trading Floor. You can sign up through our Patreon at patreon.com/thedevilsbroker, and we'll be more than happy. We've got a ton of very experienced traders here, as well as the analysts that work with us all the time. They'll be more than happy to answer any questions that you have. And of course, I'm there, so you can ask me questions. Thoughts on the SFT swing to $2? I haven't been tracking SFT. I don't know anything about a swing to $2. Shift Technologies. This is I don't know. I'd look for a sign of a reversal. This isn't a downtrend, my friend. This isn't a strong downtrend. It's broken down below its support as well. It had established a higher highs at this point, but now it's broken far below that. This is your resistance. Yeah, $1.14. Yeah, I'm afraid not. I'll need to see some. I'll need to see some strength in this one before I even think about something like that. If this is a heavily shorted stock, we can look into that, but it looks like it's going to be in this consolidation channel, this just a sideways neutral channel between let's see, $1.40 and $2. If you want to see this thing break $2, it's going to need to break 150 at least in the near term. But that downtrend is rough. I would give it some time. If you want to play like earnings or something, I mean, you do you. But earnings have been a death trap for the market lately. And even as I look at the OBV is selling off too. Oh, wait a second. I see it. There is divergence. There's more accumulation in the OBV than there is selling. But I still need to see some strength first. Definitely need to see some strength. Midpoint on this volume is at $1.75, so expect that to be an extremely heavy resistance. You need a breakout above $1.50 for it to even have a chance to swing to $2. BRQS Pelosi's son bought. Any clues? Yeah, I noticed that a long time ago. BRQS got bought up by Pelosi's son. If he's made a new purchase, I'm not aware of it, but I haven't been tracking the filings. I would just say that the guy, I don't know enough about his investments or his past successes, but if it's a politician investing in a very unusual low float company overseas, especially in China, it tends to grab one's attention. Tells you that he might know something that others may not be privy to. Let's see. Greeks, under volatility in Greeks. Thoughts on HCDI? I don't know anything about that ticker, so let's go see what it is. Harbor Custom Development. It's a slow roller. Seems like an arbitrage stock to me. This one moves between these channels quite a bit. It sets up a channel and stays in it for a long period of time, and then it will make a leg in one direction or the other. Seems like it's mostly going to the downside. They posted a profitable earnings last quarter. 15% surprise with a 2-cent. Yeah, it's a 2-cent surprise, so not by much. Let's see. I'll take a quick peek at short interest, just because that tends to have an effect. I know most people that are looking at tickers that ask me to look at it are looking at it because of high short interest. Yeah, 30% short interest. SIF free float is rapidly ascending. Volume picked up really quickly. The days to cover was 35 days, and now it's down to 5 days. Shorts are piling in on it. Probably a fundamental reason for that, and it moved up today from $2 up to $2.80. Oh, I'm sorry, I'm not showing my my Vortex right here. All right, so all right, the volume disappeared. Days to cover starting to rise. Short interest is increasing. Big spike in short interest as it hit a new peak. All right, so it looks like shorts are piling in on it. The number of loans, let's see, shorts piled in here, got out here. Shorts are winning on this one, but they're mostly day trading it, it looks like. The utilization is maxed out, though. Where is this? Is this on the threshold list? No, it is not, but there was a huge amount of failures to deliver, which is very interesting. On loan. Ooh, okay. It's interesting. I'll have to look into it more, figure out what's going on with this one. I'll add this one to my trading journal. Let's see. HCDI. Okay, thanks for bringing that one to my attention. I'll go ahead and take a look into it, and I'll cover it on Hell's trading floor at a later time. Probably, if it's a worthwhile play, I will add it to our swing trades, and you will hear about it then. For right now, it looks like it's in a sideways channel. If shorts are piling in on it, they are winning, but it looks like it's consolidating at it's getting tighter and tighter and tighter on the consolidation. So if I see more and more shorts pile in on it and there's no fundamental reason for it other than they're just doubling down and trying to put more pressure on the stock, then I might change my mind. Well, not change my mind, just like I might take a position one way or the other. But it is interesting, this volume spike here that kind of came out of nowhere. It is interesting. I'll do a little bit of extra work on this one. Little extra legwork never hurts. HCDI. Why does this one sound so familiar? I could swear nobody's spoken about it on YouTube before. Jake from State Farm wants to know if there's anything on Mullen's short interest. Short interest has been increasing. I haven't actually looked. Hold on, I gotta check my work messages and make sure that I'm not.
I think it's 100% utilized.
100% utilized. Okay.
And Captain Insano's saying they're also on the Fintel Top Short playlist.
Interesting. That is very interesting. So the since it's been trading at $1.35, and I've been holding on to a position for June. Yeah, my Mullen calls for June. They're not doing great, but they're not like totally collapsing on me. They're actually really cheap right now. That's probably why I bought them in the first place. Yeah, okay, we'll look at Mullen. Why not? I see it's been consolidating at $1.35 for a while. Let's go inspect the shorts. Oh wow, look at that buy wall. Look at that after hours buy wall. 50,000? Why? All right. Well, anyway, it's not exactly the biggest buy wall I've ever seen, but it sure is interesting. Oh yeah, okay. On loan shares are rising. Short interest spiked big time. Looks like shorts just absolutely smashed us back in early April once we were below $4 again. And they covered down here for about a yeah, the shorts that got in at this point and piled in, they got out. A lot of them got out at $1.80, and even more got out recently. So this has been consolidating for a while, and now more shorts are piling in right now. It's 4.5 million shares. It's on the threshold list. Been on the threshold list. Security volume is rapidly ascending. On loan is massive. Utilization. It's been dancing around at 100% for a while. But it didn't have to be at 100% to squeeze last time. I'm still wondering to myself if this was truly a squeeze yet. It ran, to be sure. Like, it definitely ran. But did it squeeze? No. %19 of the free float shorted. That dilution is really what hurt. And shorts piled in. I'm double checking that HCDI inspect for the squeeze really quickly, just to see what I see. This short interest and the short exempt volume is pretty high for a stock that's this thinly traded. But it's not it's not quite ridiculous. This big spike is interesting, but I'm not sure that the stock is ready to make a move just yet. I'm going to pay attention to this one though, so thank you again for bringing that to my attention. That was, who was it? Dan Morris. Thank you Thank you, Dan Morris, for bringing that to my attention. Okay. Yeah, Mullen's getting interesting again. It could consolidate for a long time though, so if anyone is looking for an opportunity, as far as whether you're looking at options or stock, right now it's consolidating nicely. $1.35 seems to be a very strong area of support, and it is a load up zone below $1.50. Let's go look at Mullen. I'm going to check out the live options on Mullen, and we'll see where the heaviest trading is. Okay. Volume graph. Okay. $1.50 for July is very heavy on the options chain for calls. Puts are increasing in value. Let's see what we got here. Oh, wow. That options chain is so heavy, dude. That options chain is so heavy. Holy smokes. If you're seeing this, what's on screen here, this is the heat map for the calls percentage of open interest against the free float. And wow. Okay. No, this can't be right. This no way. No way this can be right. The float has been diluted. This can't be accurate. Let's get an accurate float number. Because right now our data provider is saying that the float is 1.8 million. There's no way that's accurate. This is not accurate. The heat map is still showing high open interest, but there's no way the float's that small. Let me do float command and check stockbot. Stockbot, tell me your secrets. All right, shares outstanding is 17. No, still no way. There's no way. That's not true. We know that's not true. We know that can't be accurate. I'm gonna ask TradingView and go for one more. I'm gonna go to one more data source. Okay, that's more like it. 247.9 million. We'll just round it up to 250 million. On so that's according to TradingView's data provider, which I would trust far more than I would trust our data provider. We're working on fixing that. We got to get a new data provider for fundamentals trading data, but that'll have to come at another time. All the same, the float the gamma ramp is still pretty significant. I just wish that I could set the float manually so that we could fix it. Sounds like a bug to bring up with Flabbergank. I'll add that as a feature request. Okay. As I was saying, currently the May 20s are very over leveraged, but you see there's a huge block of interest happening in July. and also in October. Now, I'm betting that these options for both of those strikes are extremely cheap for Mullen. If somebody's speculating on a big move at that time, let's go ahead and take a look at the $2.50 calls for July are trading at 30 cents on the ask. And the 250s for October are trading for 45 cents on the ask. So, I'm sorry, 50 cents on the ask. Whereas if you bought the May 20s, you could get the $2.50 calls for 10 cents on the ask. So, let's talk about this because this is relevant to the options scenario, okay? Now, there is a gamma ramp here. That is true. 520 is a big gamma ramp. But do you really want to be on that gamma ramp for the speculation that it will run suddenly? Because I promise you that if Mullen does end up running, it's still, the market makers are going to still try to fight to pin it. They're going to fight to pin it. They're going to fight hard. So May 20, if you're holding it, okay, fine, you've already bought it. But if you're considering buying any calls for Mullen, you don't necessarily want to choose one that's going to be within 30 days. Because even though the price might move beyond this level, it is possible. But why would you set yourself up for a maybe when, if you believe that the company is going to be profitable for the long term and there's going to be fundamental changes and catalysts that will provide it with very clear value that will move the stock, why not give yourself more time? For 50 cents per share or $50 per contract, you could buy 10 contracts for $500 at $2.50 strike, which will put you slightly out of the money, but you give yourself a full night. You give yourself a full. It's almost 160 days. I think that's about 160 days for Mullen to move from $1.35 to $2.50. That will put you out of the money, but if that comes true, then what will happen is your delta, your gamma, and your IV will all simultaneously rise. And if the price gets to $2.50 from where it's currently trading at, and it does do that big ramp up during May, you still have more than 120 days before your calls expire. You still give yourself so much time to be correct that, say this doesn't happen, what's going to occur is whoever was trading these, they're going to roll out by another couple of they're going to roll out their options by another month or 2 months or 3 months. And by doing that, they're going to build up this chain even more, but also they're going to increase the IV, which is going to increase the value of your premium on these options. So don't buy these because they're already really cheap. They are cheap, but you're so close to expiration, and these are only about 30 to 40 cents more per contract. So you give yourself a greater chance to be correct, and even if it does squeeze here, then the value of these is going to increase more so than these because you're going to end up with a whole bunch of extra time and theta value in those options contracts. Granted, if you waited till like the week that they were expiring and somehow by some ridiculous miracle you were right and you bought these contracts for 10 cents and suddenly they were worth $1, then if they went from 10 cents to $1 per share, then yeah, that's a huge return, true. But that's still a very, very unlikely scenario. Trying to time the perfect option is a bad idea. You're going to be wrong. You're going to be wrong 9 times out of 10. Probably more like 99 out of 100. You may as well buy a lottery ticket. Let me go ahead and see what else is going on.
Yeah.
Carlton James, yes, we did talk about ATER. Still looking like it's consolidating. We'll go ahead and catch up with it just to double check the charts. And then we're going to close out the stream after these last few tickers are covered. So let's see, we got Mullen consolidating. I already said what I'm going to be doing. I'm going to be picking those far out expirations. So ATER still consolidating above $5. That's a good sign. If we get it to break out of this pennant, then I'm expecting it to move beyond 550. That'll put some more call contracts in the money. Maybe we might get the gamma ramp rolling. BQRS price target. I don't give any price targets. The only thing that I will tell you is that I do see resistances. Let's see, I must have taken down my BQRS chart. Or a BRQS. My dyslexia is just kicking in hard. All right, so it's following this trend. I'm expecting it to make a move when it breaks out either to the upside or to the downside at the tip of this pennant, and at that point we'll make a decision. So you can take that for what you will. There is resistance that I see at 40 cents and 50 cents. It looks like we've also hit resistance at 45 cents. So it seems like every 5-cent level is where we keep running into resistance. That's pretty difficult to break through. We'll see what happens as the play develops. Nile, am I buying options? No, I'm not buying options on Nile. That's a horrible idea. It's down below like 40 cents right now. It's not one you want to buy options on. I'm not going to buy options on Nile. I just have shares. CEI. I didn't talk about SST at all today, actually. I want to talk about SST. So it's still in its consolidation. It did a breakdown to the downside. This is loading up. Big volume came in to the buy side as soon as it broke down below this $13 level. This is where I feel like retail and hedge funds can load up and get a base of shares going, as well as capturing some options that have low premium. So right now, SST's options chain is pretty stacked. I'll go ahead and get that queued up while we keep rolling through the rest of these tickers. Let's look at CEI. CEI bouncing off of its trend. I'm still expecting it to continue consolidating at least for a little while. I'm going to try and capture it before it makes a big run up, but I'll be watching this one. Let me go ahead and add an alert for if it breaks to one side or the other. Okay. All right, so SST's put call ratio is around 0.22 or thereabouts. Roughly 70% of the options contracts on SST are calls. Right now, there's a heavy collection of calls on May 20th for $13 and between $13 and $15. This is quite a bit of consolidation. I do have a position in SST, one that I am probably going to be thinking about rolling out to a farther expiration sooner rather than later. But the bull case for SST is a gamma squeeze and short squeeze. There's a huge amount of gamma potential on this one because of there's an expected warrant offering on SST. I think they did some other kind of offering as well. But there's a huge amount of this stock's float that is on the options chain. So because of that, SST has a huge potential for a gamma squeeze. And I'm going to try and capture some of that for when it makes a run. It's a very low float. It's a micro float stock. Less than 7 million shares is what we're speculating. And if we have our numbers correct, there's a bunch of shares that are locked up on SST, which is why this move has to happen sooner rather than later. If the lockout period ends and the stock moves against them, or if the lockout period ends before the stock moves against the shorts, then they can put a whole bunch of new shares out into the market and force a dilution and hammer the price in before the gamma squeeze can take place. So it's kind of a race against time. Retail interest in this one is everything. Adding up some of these call contracts. Divide that by the float of 7 million just to be conservative. 35% of the options chain, or 35% of the float is on the options chain just for May 20th below $15. So if this stock goes beyond $15 in the near term, that is going to create gamma. That is going to create a gamma squeeze. Let me catch up with Discord chat. Could I look at Stab? Yeah, I can take a look at Stab. Oh, I'm sorry. I didn't show this. I didn't show this heat map for you guys. If you want, just go ahead and quickly take a screenshot of your screens, and you can take this chart. I'll give you 5 seconds. Okay. All right. So back to TradingView. Let's go look at Stab. Made a big move, consolidating to the downside. Definitely establishing a higher low. So look to see if this one sets up this trend. If it makes a move, it'll make a move towards 50 cents, and a breakout above would lead to the next leg up. For this one, I would be using Fibonacci trend-based extensions to figure out where its next resistance will be at. So it's got a lot of resistance to work past in the near term. But if it starts to break these resistances in accordance to this trend line, if it can get past 40 cents or 38 cents thereabouts before the 3rd of May, then you might see another leg up here to the upside. So there's good potential in this one. As I recall, Stab was also a heavily shorted stock with a lot of short interest way down below 35 cents. So shorts could be burying themselves. FTDs for SST seem to be wild. Yeah, that is true. That was something else that I was looking at. BBIG is still moving and possible proxy drop tomorrow as per filing. Excellent. That would be the catalyst I'm looking for. ADN. All right, I'll take a look at ADN. No more tickers. ADN. Looks like sideways consolidation. Maybe a bit of stop loss hunting. Let's look at this on the daily. I want to see this on the daily chart. Auto. All right. Okay, I see a triple bottom here and a big surge of volume here several days after earnings with a bad earnings report, which is interesting. Could be a bear rally. Could be shorts covering their positions. Advent Technologies Holdings. Let's set up a trend and figure out where this is. Okay. All right. It is in a down channel. It's still in a down channel. So you want to see where this thing goes. It has to make a decision, but this big surge of volume that caused the OBV to go bonkers, that is a sign of bullish divergence. That is big bullish divergence. So you could be onto something with this particular pick. MACD is about to cross. So at the very least, I would say that this one could play to the upside of about, it could play to the upside between $3 and $5 just based off of this channel. If the stock does start to make a move, you'd be waiting until July to see that play out if it held this channel. Downside is you've got a good risk to reward setup because you've got this triple bottom acting as support. Let's go do a volume profile on this also and see what this was trading like. Okay, interesting. All right, so this could break to the downside badly. But a triple bottom is typically a bullish pattern, and you see it consolidating to the side here. This is a good sign of interest. Plus, you have this big green candle showing it's lifting the volume average and creating interest in the stock. I'll do another check on one last thing with Ortex just to see if there's anything else that can tell us. And then this is going to have to be it for me. Sorry guys, I'm not going to do any more tickers. The outlook of RDBX is that it's not done squeezing. I'm not telling anybody what to do, but I still see upside in it. Okay, yeah, ADN definitely has the short interest, and it's a micro float, so that definitely has my attention. Utilization is maxed out. Cost to borrow is starting to rise. That's good. Ooh, all right. Yeah, somebody recalled their shares. That's what happened here. Cost to borrow increases like this, and you see a big surge in volume. Some shorts were forced to cover. This was a recall. So this was a bear rally, but it was caused by shorts covering, and then now they're paying a higher cost to borrow to short it, and they re-shorted those shares. That's what that change tells me. Learn how to read these charts. Learn what these things mean. Ortex tells you some powerful information if you learn how to read it right. Okay. So, all right, boom. This thing takes off. Shorts pile in. Yeah. And they paid the higher cost to borrow to do it. Okay, so you've got a whole bunch of shorts that are piling in right now that are getting interested in this stock. I would wait. I would be patient. Hold off on it. But we're going to, I'm going to do some DD on this company, go find out what the fundamental catalysts are. Let's make a note. If there's an analyst here, or J Ruff, if you're still with me, leave a note in the analyst channel. I want to let them know about this play, and let's start doing some DD on this one. So that's 2 to add to the trading journal. An HCDI and ADN. We're going to do some DD on those 2 plays and see what we can find. All right. Okay. Daniel M. No, we didn't cover Prague, but it's still consolidating. I'm not going to do any more tickers, though, because I got to go. It's pretty late. Yeah, still consolidating at 83 cents. So that's about all that I can tell you. We just got to wait, all right? Prague's a patience play. Okay, that's going to be it for me, guys. Thanks so much for stopping by and coming to watch. Hopefully we'll have some better news for you later on. It's been a hell of a trading week, so thank you all for being a part of the Hell's Trading Floor community. And hopefully we'll get to see you again next week when I've got some time, if I can squeeze it out of my busy work schedule. Thanks you so much for stopping by. I will see you guys next week. In the meanwhile, have a hell of a weekend.